Greetings, creators, gods, welcome. Today we're continuing Encyclopedia Britannica, Banks and Banking. Before the Reichsbank was established, Hamburg was the first and for a long time the only example of a clearing in Germany. This was taken up by the Reichsbank when it established its office in Hamburg in the time-honored building which had belonged to the Hamburg Clearing House. Similar business had long been undertaken by the Bank of Prussia. This was absorbed and developed by the Reichsbank in 1876. Through the clearing system, money can be remitted from any of the 443 places in which there is an office of the Reichsbank to any of these places without charge either to the sender or the receiver. It is sufficient that the person to whom the money is to be remitted should have an account at the bank. Any person owing him money in the remotest parts of the empire may go to the office of the bank which is most convenient to him and pay in the amount of his debt, which is credited on the following day at the office of the bank without charge to the account of his creditor wherever he may reside. The person who makes the payment need not have any account with the bank. The impetus given to business by this arrangement has been very considerable. It practically amounts to a money order system without charge or risk of loss in transmission. From Hamburg and Bremen to the frontiers of Russia, from the shores of the Baltic to the frontiers of Switzerland, the whole of the Empire of Germany has thus become, for monetary purposes, one country only. The amount of these transfers for the year 1906 exceeded 1,860,000,000. The note circulation is also a powerful factor of the business of the Reichsbank. It is governed by the law of 1875 and the amending law of 1899, corresponding in some degree to Peel's Act of 1844, which regulates the note circulation of the Bank of England. An uncovered limit, originally £12,500,000, increased to £14,881,450 by the lapse of the issues of other banks allowed to it, has been extended by these and by the Act of the 5th of June 1902 to £23,641,450. Against the notes thus issued, which are not represented by specie, gold or silver, treasury notes, Reichskassenschein, the legal tender notes of the empire. We have a footnote here, 1. The imperial treasury is bound to pay the state notes in cash at any time when this is required, but an independent fund of cash set apart for this purpose does not exist. See Hand Wörterbunch, Volume 5, Article Papiergeld, page 97, Jena, 1893. The imperial treasury is bound to pay the state notes in cash at any time when this is required, but an independent fund of cash set apart for this purpose does not exist. And the notes of the issuing bank, which are allowed to be reckoned as specie, gold or silver, or discounted bills, must be held maturing not later than 3 months after being taken, with, as a rule, 3, but never less than 2 good endorsements. There is also a provision that at least 1/3 of the notes in circulation must be covered by current German notes, money, notes of the Imperial Treasury, and gold in bullion or foreign coin reckoned at 69 pounds and 12 cents per pound fine. The Reichsbank is bound by law to redeem its notes in current German money. It is stated that this may be gold coin or silver thalliers or bar gold at the rate of 1,392 marks or 69 pounds 12 cents, reckoning marks as 20 equal 1 pound. The pound fine of gold. In practice, however, facilities have not always been given by the Reichsbank for the payment of its obligation in gold, though the importance of this is admitted. In the balance sheet for 1906, the bills held amounted to 67 million pounds, and the loans and advances to 14,200,000. The notes issued averaged for the year 69 million pounds. The gold held amounted 30th December 1906 to 24,069,000 pounds. If the condition of business requires that the notes in circulation should exceed the limits allowed by the law, the bank is permitted to do this on the payment of 5% on the surplus. In this respect, the German Act differs from the English Act, which allows no such automatic statutory power of overpassing the limit of issue. Some good authorities consider that this arrangement is an advantage for the German bank, and the fact that it has been made use of annually since 1895 appears to show that it is needed by the business requirements of the country. Of late years, the excess of issue of the Reichsbank has been annual and large, having been 25,267,000 pounds on the 29th September 1906 and 28,632,000 pounds on the 31st of December of the same year. The amount of the duty paid on the excess issue in the year 1906 was 184,764 pounds, and the total amount paid thus from 1876 to 1909 was 839,052 pounds. The increase of the uncovered limit, untaxed limit of issue, called in German the note reserve, has not been sufficient to obviate the need for an excess of issue beyond the limit. In accordance with a law passed in 1906, the Imperial Bank issues notes, German, in brackets, the word in German, of the value of 20 marks or 1 pound, and 50 marks, 2 pounds 10 cents, 10 shillings. In addition to the 5, 10, 100, and 1,000 mark notes, 5 shillings, 10 shillings, 5 pounds, 50 pounds previously in circulation. Imperial paper currency of the value of 20 or 50 marks or 1 pound and 2 pounds 10 shillings had previously existed only in the form of treasury notes. And it has German in brackets. These will, in consequence, be withdrawn from circulation. The amendment of the banking law of Germany, passed in 1899, not only affects the position of the Reichsbank, but that of the 4 other note-issuing banks. The capital of the Reichsbank has been raised by the bill of that year to £9 million. The reserve fund has been raised out of surplus profits to £3,240,000. This exceeds the amount required by the Act of 1989, which was £3 million. The amending act further diminishes the dividend receivable by the stockholders of the Reichsbank and increases the share which the government will obtain. The arrangement with the four note-issuing banks is designed to cause them to work in harmony with the Reichsbank when the Reichsbank has to raise its bank rate in order to protect its gold reserves. The official published rate of discount of the Reichsbank is to be binding on the private note-issuing banks after it has been reached or when it reaches 4%. At other times, they are not to discount at more than a quarter percent below the official rate of the Reichsbank, or in case the Reichsbank itself discounts at a lower rate than the official rate at more than a fifth percent below that rate. It looks like a fifth, 1/5 or 1/3. If the Reichsbank discounts below the official rate, it is to announce that fact in the Gazette. The subject being important, we quote from the amended act the sections governing the discount rate. Gesetz betreffend. German, all that is German. I don't want to butcher it. We're jumping down to the private note issuing banks are bound by Article 7, Section 2 after the 1st of January 1909. It says that 1. Not to discount below the rate published in Section 15 of the Bank Law, so long as this rate attains or exceeds 4%, and 2. Moreover, not to discount at more than a quarter percent below the Reichsbank rate published in Section 15 of the Bank Law, or in case of Reichsbank itself discounts at a lower rate, not to discount at more than either a third percent below the rate. It remains to be seen whether the note-issuing banks will find these conditions too onerous, and rather than be bound by them, will give up their right of issuing notes. The object of the enactment is apparently to protect the specie reserve of the Reichsbank, but it may be doubted whether, considering the importance of the other banks of Germany, none of which is bound by similar conditions, relatively to the note-issuing bank, the restrictions put on the note-issuing banks will have any practical effect. So this restriction was placed to protect the specie, reserve. Since 1870, banking has made immense progress in Germany, but it may be some time before the habit of making payments by check instead of specie or notes becomes general. All right, and then we have some authorities of where they would have written this article from. All right, all here is authorities. So we have authorities, parliamentary papers. Then we have general information, articles on banking, dictionary of political economy. All these here is general information. And we have early, all these citations here. I'll scroll through it slowly so you guys could, pause and read if you want. All right. Alright, selected tracts on money, etc. reprinted privately by Lord Overstone, 1855, containing more valuable and interesting information on early history. And then A. Crumb, practical treatise on banking. All this is citations here, all this. Then we have Bank of England, more citations. Then we have history of banking houses, more citations. Scotland, British colonies, Germany, Italy, Austria, Japan. Right? Citations for the article that we just read on banks and banking. And that was Germany. So these articles consist of the German part of banks and banking. All right. We also covered French, right? So now we're going on to America or the United States. All right. The early history of the American colonies is strewn, like that of most new countries, with many crude experiments in banking and currency issues. Most of these colonial enterprises, however, were projects for the issue of paper money rather than the creation of commercial banks. Speculative banking was checked to a large extent in the colonies by the Bubble Act 6 George I c. 18, which was passed in England after the bursting of the South Sea Bubble. This act, which forbade the formation of banking companies without a special charter, was in 1740 extended to the colonies. The serious history of banking in the United States may be said to have begun with the foundation of the Bank of Pennsylvania. This bank originated in the project of a number of the citizens of Philadelphia to supply the Continental Army with rations. The first bills issued in 1780 were nothing more than interest-bearing notes payable at a future time. The advances in Continental money made by the shareholders were secured by bills of exchange for £150,000 drawn on the American envoys in Europe but not intended to be negotiated. A further outgrowth of the needs of the Continental government was the Bank of North America, which was authorized by Congress on May 26, 1781. The act gave to Robert Morris, the financier, power to create a bank with a capital of 400,000. Notice the sign. Notice the symbol for money has two strokes. To be increased if desirable. Morris arranged with the Bank of Pennsylvania to take over its holdings of foreign bills and paid in cash its claims against the Federation. The Bank of North America did not begin business until the 7th of January, 1782, and there was so much doubt of the power of the Continental Congress to charter a bank that it was thought advisable to obtain a charter from the state of Pennsylvania. So under this charter, the bank continued to operate until it was absorbed in the national banking system in 1863. And it may be considered the oldest organized banking institution in the United States. So the bank did much during the first 8 years after its organization. To restore order to the chaos of Federation finances, it loaned to Morris as government superintendent of finance $1,249,975, of which $996,581 was to be repaid in cash, and the remainder by surrendering the stock in the bank owned by the government. The Bank of the United States. A national bank of issue was one of the essential parts of the system built up by Alexander Hamilton in organizing the finances of the federal government under the Constitution of 1789. The first Bank of the United States was accordingly incorporated in 1791 with a capital of $10 million divided into 25,000 shares of 400 each. This bank issued circulating notes, discounted commercial paper, and aided the government in its financial operations. The government subscribed 1/5 of the capital, but paid for it by a roundabout process, which actually resulted in the loan of the amount of the bank to the Treasury. Other loans were made by the bank to the government, which gradually carried the obligation by the end of 1795 to $6,200,000. In order to meet these obligations, the government gradually disposed of its bank stock until by 1802 its entire holdings had been disposed of at a profit of 671,860. The bank did not publish regular reports, but a statement submitted by the Gallatin to Congress for January 24, 1811 showed resources of 24,183,046, of which 14,578,294 was in loans and discounts, 202,750,000 in United States stocks, and 5,009,567 in specie, that is gold and silver. So 5 million in gold and silver. The expiration of the charter of the bank in 1811 was the occasion of a party contest, which prevented renewal and added greatly to the financial difficulties of the government in the war with Great Britain, which began in the next year. Although foreign shareholders were not permitted to vote by proxy, and the 25 directors were required to be citizens of the United States, the bank was attacked on the ground of foreign ownership as well as on the constitutional ground that Congress had no power to create such an institution. The government was compelled in the War of 1812 to rely on the state banks. Their suspension of specie payments in 1814 made it very difficult for the Treasury to transfer funds from one part of the Union to the other, because the notes of one section did not circulate readily in another. So Gallatin left on the record the opinion that the suspension of specie payments might have been prevented at the time when it took place had the former Bank of the United States been still in existence. The financial condition of the government became so bad during the war that the Second Bank of the United States was authorized in April 1816. The general project was that of Alexander J. Dallas, who in October 1814 had become Secretary of the Treasury. The capital of the new bank was 35 million, and the government again appeared as owner of 1/5 of the stock, which was paid in a stock note. The President of the United States was authorized to appoint 5 of the 25 directors, and public funds were to be deposited in the bank, unless the Secretary of the Treasury shall at any time otherwise order and direct. The right of Congress to charter the bank came before the Supreme Court in 1819 in the famous case of McCulloch versus Maryland. Chief Justice Marshall rendered the decision that the right to create the bank was within the implied powers granted by the federal Constitution, and that it was not competent for the states to levy taxes upon the circulating notes of the bank or upon its property except in common with other property. The Second Bank of the United States was not well managed in the early part of its career, but what was upon a firmer foundation under the presidency of Langdon Cheves in 1819. Its policy greatly benefited commerce, but invited bitter complaints from the private dealers in exchange, who had been enabled to make excessive profits while the currency was below par because of its different values in different states and the constant fluctuations in these values. The bank, in the language of the report of Senator Samuel Smith of Maryland in 1832, furnished a currency as safe as silver, more convenient and more valuable than silver, which through the whole western and southern and interior parts of the Union is eagerly sought in exchange for silver, which in those sections often bears a premium paid in silver, which is throughout the Union equal to silver in payment to the government and payments to individuals in business. The bank in 1835 had attained a circulation of 23,075,422 loans of 59,232,425 and deposits of 5,061,456. The institution was ultimately destroyed by the open enmity of President Jackson, who in 1833 had suspended the deposit of public money in its custody. This policy, known as the removal of the deposits, excited a bitter political controversy in which Clay and Webster led the opposition, but Jackson was supported by the public. See Jackson Andrew. The federal charter of the bank expired in 1836. Under a charter obtained by President Nicholas Biddle from the state of Pennsylvania, the bank continued its business, but without success, and in 1841 it went into liquidation. The state banks, the Bank of the United States, found powerful rivals during its life and successors after its death in the banks chartered by the separate states. In the undeveloped state of the country in the early days, there was much unsound and speculative banking. The most successful systems were those of New York and New England, where the surplus capital of the country in the early days was chiefly concentrated. Remember, New England is America. I think a part of America was called New England, right? The least successful banking systems were those in the newer and poorer sections of the country, and they grew progressively worse as poverty and inexperience added to the difficulty of setting aside capital for investment in the tools of exchange. The termination of the first charter of the Bank of the United States was followed by a banking mania. In Pennsylvania, a bill authorizing 41 new banks was passed over the veto of the governor, and 37 of them were in operation in 1814. Similar movements in other states increased the number of banks in 4 years, 1811 to 1815, from 88 to 208. The amount of specie was not adequate to support the mass credit which these banks created, and what there was in the country drifted to New England, which was upon a metallic basis. A number of banks collapsed in 1814, and business prostration was prolonged for several years. The banking laws of the states varied considerably. Some states authorized the issue of notes upon state bonds, many of which, especially at the outbreak of the Civil War, proved valueless. In New England, however, a system prevailed which required the prompt redemption of the bank's notes at par. The New England Bank was the pioneer of this movement in 1840. In 1824, what was known as the Suffolk system of redemption came into operation. This system provided for the deposit by a bank in the Suffolk Bank in Boston of a redemption fund, from which the notes were redeemed and afterwards sent home by the Suffolk Bank for collection. This system, with slight modifications, continued in successful operation until 1858. The circulation of the New England banks in 1858 was less than 40 million, and the redemptions in the course of the year, through the Suffolk Bank were 400 million. It was the essential merit claimed for the system that it tended to keep the volume of the circulation constantly adjusted to requirements of business. A branch redemption agency was established at Providence. Legal sanction was given to the system in Vermont by an act of 1842, which levied a tax of 1% upon bank capital, but remitted this tax to any bank which should keep a sufficient deposit of funds in the city of Boston and should at that city uniformly cause its bill to be redeemed at par. The period from 1836 to 1842 was a trying one for American banking. It was preceded by another great expansion in financial ventures, made without sufficient circulating capital or adherence to conservative banking methods. Foreign capital had come into the country in considerable amounts after the English crisis in 1825. The entire debt of the general government was paid off, and a tremendous speculation occurred in public lands, which were expected to advance rapidly in value as the result of the immigration and the growth of the country. The sales of public lands in 1836, on the eve of the crisis, reached 20,774,870 acres. and brought receipts to the Treasury of 25,167,833. How essentially speculative was the mass of these sales is indicated by the fact that such receipts declined in 1842 to only 1,417,972. President Jackson pricked the bubble of speculation by the Specie Circular of July 11, 1836, requiring payments of public land for public lands to be made only in specie or notes of specie value. So that's gold or silver, or notes backed by gold or silver. Practically every bank in the Union stopped payment, and banking capital fell from 358,442,692 in 1840 to 196,894,309 in 1846. As usual in periods of business collapse, the shrinkage of capital did not follow at once the outbreak of the panic, but was the result of gradual liquidation. Specie payments were resumed in 1838, but there was another crash in 1842 after the United States Bank finally suspended. After the United States banks finally suspended. In New York, which was becoming the chief commercial state of the Union, the banks of New York City were generally sound, but several different systems were tried of securing the circulating notes. The Safety Fund system, inaugurated in 1829, provided for a contribution by each bank towards a fund to meet the deficit of any contributing bank which might fail with assets insufficient to meet its liabilities. It was the intention of the Act to protect by this fund only the bank notes, but it was treated as a fund for the payment of all the liabilities of a failed bank, and in consequence the fund was exhausted by important failures which occurred in the panics of 1837 and 1857. Before 1843, the issue of notes was not controlled by the state, so that in several cases there were illegal over-issues. What was called the free banking system was inaugurated in New York by the Act of 1838. This system permitted any body of persons complying with the requirements of the law to form a bank and issue circulation secured by the deposits of various classes of public bonds. This system was in operation at the outbreak of the Civil War, was imitated in several other states, and became in a measure the model of the national banking system. The state banks of Indiana and Ohio were among the most successful of the state banks, being modeled somewhat on the European plan of a central bank. They held in their states an exclusive charter for issuing notes and had branches at important points throughout the state. Under the management of Hugh McCulloch, afterwards Secretary of the Treasury, the Bank of Indiana weathered the crisis of 1857 without suspending specie payments, and retired its circulation when gold went to a premium in 1862. One of the defects of the state system of notes issues was the inconvenience which it occasioned. Notes issued outside a state could not safely be received without careful scrutiny as to the responsibility of their issuers. The systems prevailing in New England, in Louisiana, in Ohio, and in Indiana were eminently successful and proved the soundness of the issue of banknotes upon the assets of a well-conducted commercial bank. But the speculation fostered by loose banking laws in some other states and the need for uniformity cast a certain degree of discredit upon the state banks and prepared the way for the acceptance of a uniform banking system in 1864. The power of note issue formed a more important part of banking resources before the Civil War than in later years, because the deposit system had not attained its full development. Thus, in 1835, circulation and capital of state banks combined were about 335 million, and deposits were only 83 million. In 1907, circulation and capital of national banks 1,430,000,000, while deposits were 4,332,000,000. In the earlier period, deposits forming less than one-third of the other two items, and in the latter period, 3 times the other items. The circulation of the state banks fluctuated widely at different periods. A maximum of 149,185,890 was attained in 1837, to decline to 106,968,572 3 years later, and to a minimum of 58,563,608 in 1843. From this point, there was a tendency upward, with some variations which put the circulation in 1845 at 89,608,711. In 1848, it went to 128 million. In 1850, it went to 131 million. In 1854, 204 million. In 1856, it dropped to 195 million. In 1858, it dropped to 155 million. In 1860, it went back up to 207 million. And in 1863, 238 million. So that is variations. So other leading items of the accounts of the state banks for representative years are as follows. So you had state banking progress 1835 to 1863. You have the year, the number of banks, capital stock, loans and discounts, deposits. Right? There's some figures here. Right? You all could pause and go through that. The national banking system, the creation of the national banking system was mainly the outcome of the financial necessities of the federal government in the Civil War. It was found difficult to float government bonds at profitable rates, and Mr. Chase, the Secretary of the Treasury, devised the scheme of creating a compulsory market for the bonds by offering special privileges to banks organized under federal charters, which would issue circulating notes only when secured by the deposit of government bonds. But this plan, authorized by the Act of 25th February 1863, supplemented by the Act of 3rd June 1864, was not sufficient to give predominance to the national banks. The state banking systems in the older states were so firmly entrenched in the confidence of the commercial community that it became necessary to provide for imposing a tax of 10% upon the face value of the notes of state banks in circulation after the 1st of July 1866. The state banks were thus driven out of note issuing business, some being converted into national banks while others continued their commercial business under state laws without the privilege of note issue. A remarkable growth in the national banking system took place in 1864. There were 453 national banks with an aggregate capital of 79 million. And in 1865, there were 1,014 banks with an aggregate capital of 242 million. The national banking system was specially marked by the issue of circulating notes upon the United States bonds. Any national bank desiring to issue notes might by law deposit with the United States Treasurer bonds of the United States to an amount not exceeding its capital stock, and upon such bonds it might receive circulation equal to 90% of their par value. No bank could be established which did not invest one-third of its capital in bonds. This was changed in 1874 so as to reduce the requirement to 25%, with a maximum mandatory requirement of 50,000. Notes were taxed at the rate of 1% per annum. The banks obtained from the provision for circulation the benefit of what was described by critics as double interest. Being credited with the interest on bonds in the custody of the Treasury Department and being also able to lend their notes to the public. But several deductions had to be made. Notes could not be issued to the full par value of the bonds. The tax of 1% upon circulation reduced by that amount the profit which would otherwise be earned, and the bank had to set aside in gold or other lawful money what was needed for redemption purposes and for reserves. As the banks suspended specie payments at the close of 1861 and great masses of government paper money were issued, gold ceased to be a medium of exchange except in California, and the new banks redeemed their notes in government paper. The gold value of the banknotes therefore rose and fell with that of government notes until the resumption of payments in specie by the National Treasury on 1st of June 1879. The amount of banknotes in circulation proved in practice to be influenced largely by the price of bonds. The maximum originally set for bank circulation was 300 million. This was increased in 1870 by 54 million, and in 1875 the limit was removed. The circulation reached 362 million on the 1st of January 1883, but afterwards declined materially as bonds became scarce and the price rose. The fact that circulation could be issued to only 90% of the par value of the bonds greatly reduced the net profits on circulation when the price of 4% bonds rose in 1889 above 129, and other classes of bonds rose in like ratio. The circulation of banknotes fell as low as 167 million on the 1st of January 1891, but afterwards increased somewhat as the supply of bonds was increased to meet the Treasury deficiencies in 1894 to 1896 and the expenses of the war with Spain. The national banks supported the government cordially in the measures taken to bring about resumption of gold payments on the 1st of January 1879 under the law of 1875. The banks held more than 125 million in legal tender notes, of which some, nearly one-third, was held in New York City. A run upon the Treasury for the redemption of these notes would have exhausted the gold funds laboriously accumulated by Secretary Sherman and compelled a new suspension. But the banks appointed a committee to cooperate with the Treasury, declined to receive gold longer as a special deposit, and resolved to receive and pay balances without discrimination between gold and government notes. Thus resumption was accomplished without jar, and as early as the 17th of December 1878, gold sold at par in paper. The silver legislation enacted by Congress in 1878 and 1890 caused uneasiness in banking circles, and the banks discriminated against silver dollars and silver certificates in their cash. When the Treasury began to lose gold heavily, however, in 1893, a combination of leading banks in New York, Boston, Philadelphia, Baltimore, and Chicago turned over a large part of their holdings to replenish the government reserves. About 150 national banks suspended during the Panic of 1893, but 84 of these afterwards resumed business. As in former periods of depression, the system suffered the greatest decline during the years of liquidation following the actual panic, the number of banks falling from 3,856 on the 1st of June 1893 to 3,585 on the 1st of June 1899, and aggregate capital falling during the same period from 698 million to 610 million. A new extension was given to the national banking system by the provisions of the Gold Standard Law of 14th March 1900. Banks were authorized to issue circulation to the full par value of bonds deposited, and the tax upon circulation was reduced from 1% to half of 1% in the case of circulation which was secured by the 2% refunding bonds, which were authorized by this law. By issuing 2% bonds in exchange for those paying a higher interest, At approximately the market price, it became possible to obtain a given amount of notes upon a smaller investment in bonds, independent of other provisions of the law. Under these provisions, the volume of notes outstanding secured by bonds, which stood on the 31st of October 1899 at 207 million, reached on the same date in 1900 298 million. In 1901, 328 million. In 1902, 335 million. In 1903, 380 million. In 1904, 425 million. In 1905, 490 million. In 1906, 536 million. And in 1907, 562 million. The lowest denomination of national bank notes authorized by law is 5, and not more than 1/3 of any bank's issues can be of this denomination. The government issues notes for 1 and 2 as well as for higher denominations. The largest amount of bank notes of one denomination is in bills for 10, which on the 31st of October 1907 constituted 249 million in total outstanding issues of 609 million. Of this total circulation, 562 million was secured by bonds, and the remainder 47 million was covered by lawful money in the government treasury, deposited for the redemption and retirement of the notes as they might be received. An important extension of the national system resulted from the authority given by the Act of 1900 to incorporate national banks with a capital as low as 25,000 in places having a population not in excess of 3,000. The previous minimum limit has been 50,000. Under this provision, there were incorporated to the 31st of October 1907 2,389 national banks with capitals of less than 50,000, with aggregate capital of 62 million, of which 272 banks were conversions of state and private institutions, 752 were reorganizations, and 1,365 were new institutions. The national banks possess most of the powers of commercial banks, but are not permitted to hold real estate other than their banking houses, unless taken for debt. 5 reports are required each year to the comptroller of the currency at dates selected by him without notice, and each bank is subject to the visitation of bank examiners acting under the comptroller. No reserve against notes are required by existing law except 5%, which is kept in Washington for current redemption purposes. The redemption system is defective in that redemptions are not authorized at other places, and the notes reach the Treasury on an average about only once in 2 years. For many years, the banks were prohibited from retiring more than 3 million of notes monthly, but the limit was raised by an act of 4th of March 1907 to 9 million per month. So reserves are required against deposits to the amount of 25% in so-called reserve cities, and 15% is in what are called the country banks. Outside the reserve cities, not all these amounts, however, are required to be kept in cash. The 3 central reserve cities where cash is required, with only trifling deductions, are New York, Chicago, and St. Louis. In other reserve cities, which in 1908 numbered 40, the banks are permitted to deposit half their cash in national banks in central reserve cities, while country banks may deposit 3/5 of their cash in any reserve city. The shareholders of national banks are subject, in case of liquidation, to double liability upon their shares, and this is now the rule in most of the conservative state banking systems. National banknotes are not legal tender, but are receivable by the government for all obligations except custom dues. National banknotes are not legal tender, but are receivable by the government for all obligations except custom dues. All right, guys, we're gonna stop there for today. All right, That was a solid, heavy-weighted piece of knowledge there. We're going to take it up from the Panic of 1907 on the next read. Thank you for your time and patience. Remember, strength in body, powers in mind. Stay up.